and welcome into Making Sense. You know, we're coming to the end of 2015. Boy, does time fly. And you might be saying, you know, it's time to think about some end-of-the-year donations, maybe some gifts, things you can do. To give us some great advice on this, we brought back our buddy Brandt McDonald.
Hi, Jack.
McDonald, Barranco, Hagen
That's
Wealth
right.
Management Company.
Right.
And, you know, you've been with us all year long.
Yeah, that's right. And I love it. It's great.
You know, one day we're going to do this, Brent. We're going to go back to the January show and see everything we said. Then we go to December and see how it all, you know, kind of played out. Because interesting things happen during the course of the year, don't they?
It really did. You know, actually this year might be a good year for me to
it
do
would
that
be,
because it's kind of, you know, played out the way we sort of thought it would. Quite a bit of volatility, market, not a whole lot of traction, not a whole lot of progress throughout the year for a variety of reasons. And here we are, as you say, right here at the end of the year. So, you know, what can we do to try to maximize a return on our dollar? Well, that's why we're talking about taxes.
Absolutely.
You know, one of the things I find in our firm that's so rewarding is getting involved with clients in terms of balance sheet management and income management. And this is a great time to do that. You know, you start thinking about some of the simple ways to do this. Tax harvesting, particularly around mutual funds, is a big deal. And I should say the first thing is, this is interesting because a lot of people don't realize this, but the number one problem they have is they'll buy a mutual fund in November or December, and guess what? They just bought a tax liability.
They sure did.
They didn't really realize what they were doing. So you want to be really careful about that. The other thing is look at these mutual fund holdings that you already have and see, you know, sort of what type of tax liability may be coming if there's going to be a distribution of a capital gain or maybe a big income payment towards the end of the year. You can kind of manage around that. Some of the other things that we're doing with clients is going in and looking at, you know, year-end contributions to retirement accounts. Can we maximize, you know, the amount that you can donate or contribute to a retirement plan, whether it's your 401k or a 403b or a deferred compensation plan, also called 457 plans. Or it could just be something that you do at home, a contribution to a Roth or a traditional IRA. So all of those things need to be looked at. I think also little things, depending upon your estimated tax liability for the year, you may want to go in and look at accelerating your January mortgage payment. Go ahead and get that in December because you can get a deduction for that interest in this year. There are other things you can do in terms of accelerating expenses. If you're a small business owner or someone who was looking at making year-end donations or gifts or things like that, go ahead and accelerate those now depending upon what you think your tax liability may be this year. The other thing too that's a really interesting concept is, let's say that you have pledged to make a contribution to a capital campaign or to your local church or synagogue or whatever that may be. Look at your stock portfolio. A lot of people may have stocks in their portfolio who have a considerable appreciation. You can donate the stock to the charity in lieu of making a cash contribution. And the reason you would do that is because then you don't have to pay the tax on the gain.
Okay.
You know, so if you had a stock that you paid, let's say $20 for, and it's worth $50, and you had 1,000 shares, and you wanted to make a $5,000 contribution to your church or whatever charity it is, go ahead and maybe donate 100 shares of that $50 stock, which is $5,000. You get the full deduction for the gift, but then the charity sells that stock, and you don't have to pay the gain on that $30 in that stock. So little things like that, little things like that are really important. And we call that, again, it's balance sheet management. It's managing your income statement. We all have these at home. And so the last thing I would say is make sure that you get with a really professional, you know, a competent advisor. I mean, at our firm, we don't do tax returns, and we don't do a whole lot of intricate sort of granular tax planning, but we work alongside great CPAs and tax attorneys to sort of maximize, again, the return on the dollar for our clients.
And that's the reason, obviously, when you're using something like a financial advisor, your accountant is not necessarily the one that can just go out and tell you which stock to get.
Yeah, and see, that's the important thing about, I think, the reason we do what we do. We view our clients as sort of in the center. It's like a hub and spoke. So that client wants to be surrounded by 3 really great professionals, a wealth management team, a CPA, and a great attorney. And if those 3 are communicating with one another, very open, very transparent, and willing to sort of share information for the benefit of the client, then you can really maximize, again, that the efficiency of managing a client's balance sheet and their investment portfolio, because a lot of times a CPA is not communicating with the advisor or vice versa, and things are going on, and it may or may not be the best thing for the client.
Yeah, in a lot of
so
cases,
it's really critical.
Your attorney and your accountant don't even know each other.
That's right.
Yeah.
And that's one of the first things we do with all of our clients, because we build these really nice plans for our clients centered around entire estates and the overall generational planning and solving problems and solutions, not only for retirement, but also how do you pass wealth to the next generation. And so if we're over here as a silo telling the client what to do, then guess what? It could be a gotcha moment when the CPA does that tax return, or that attorney goes, what in the world has happened here? So we don't want to be a part of a problem, we want to be a part of a solution. So that's why we really want to know, Mr. and Mrs. Client, who is your CPA, who is your attorney, and oftentimes we already know them anyway because of the business we're in. And then we get on the phone and we start talking.
Put them all together.
You put them all together.
Good. Thank you for doing that. And just remember this, we're near the end of the year. Do not procrastinate. Before you know it, you're going to be toasting the new year and thinking, oh my gosh, what didn't I do in 2015? We'll be right back right after this.